Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, as we come into Tuesday, it is official. Janet Yellen is now the Secretary of the Treasury. The fairy godmother, as I've coined her, is all ready to spend the money. It's interesting to me that she gets confirmed 2 days before the Fed makes an announcement. So we'll have to see just how this team is going to work together. If you recall, and you've watched this channel for a while, you'll know that I've talked about the two-pronged approach to the crisis going back to March and April of last year. I talked about you have to have the monetary side or the creation of money and the fiscal side working together, or the spending of money. And we had a lot of resistance against some of that as we went forward. Much of it happened, but now the gates are open and we're all ready for MMT, or modern monetary theory. I still believe this is going to be the primary factor that's going to drive us forward, and that they're going to print as much money as they need to print to make things happen. That doesn't mean, by the way, that there's a straight line up because of that. There will be a line up, but not necessarily straight. I've talked a lot about our database starting to get mature on a short-term basis, but on an intermediate-term basis, there's a long way to go. I won't be able to cover the database tonight because I'm doing this video a little earlier than normal. The database has not completely updated as of the moment, so I will not be talking a lot about the rotation, but it is getting long in the tooth, which suggests that we're likely to see some churning up at these levels. Now, if we look at yesterday's action, we saw the S&P and the NASDAQ continue to move higher, led by Apple. Apple has earnings coming out on Wednesday. We know that's going to be a big event. Everybody's watching. Have the analysts overpriced this thing, or are the expectations just too high? Well, we'll find out on Wednesday, but there's a lot to follow this week. As I mentioned in last night's video, that we're still seeing the earnings coming out. There's going to be a plethora of those coming out, and a lot of big companies reporting this week. This is a huge week from earnings, but we also have GDP. We have claims and the continuing claims coming out on Thursday. There's just plenty to look at, not to mention that the Fed is going to have their meeting and a conference call on Wednesday. So I'm really looking forward to seeing how this thing is positioned. And I have a question for you. Do you still think the Fed is independent? I'm not sure the Fed has ever really been independent, but it's most likely now that they're going to be the team that I've been talking about for nearly a year as we've been going through this crisis. There's going to be some really interesting things coming out of the markets over the next several weeks. Let's dig into the charts and see how Tuesday is setting up. Well, folks, I didn't think I was going to get a chance to cover the database, and it finished by the time I got done editing the front end of the video. A major surprise here, and we had nearly 1,900 sell signals, only 300 buy signals. So this is a huge surprise. I really wish I could have seen this before I started the video. I'm trying to get everything done on a very timely basis, and regardless of that, we are seeing a substantial move with the database dropping all the way down to 63.79. Now, a number that I haven't talked about for a couple weeks is a 62% bullish level. If we drop below that, that's going to suggest further liquidation. I think this is very interesting. This is one of the key elements that I was talking about. Now, as I mentioned in the opening comments, we're really not seeing on an intermediate basis any selling, but it is getting somewhat long in the tooth. I discussed that in last night's video. This is a big surprise and somewhat of a shock to the short-term database. in spite of the S&P being up slightly yesterday and the NASDAQ being up, we saw this kind of selling, and this is usually a big warning sign. As I also mentioned in the opening comments, is I expected to see us grind up here. This could develop into something bigger if we take out this 62% level. We're coming into the anniversary of the decline last year. As I mentioned, this week last year, we are starting to see selling on the intermediate database. We did not see any real selling coming into the intermediate database, but we did see some additional buying, and we pushed up into the 81% level, which I mentioned in last night's video is somewhat alarming from a bullish percent basis. So we'll have to see how this thing unfolds over the next couple of days and alert that we are seeing some liquidation here, which is material. As I begin with the S&P futures, we are seeing the market down about 0.25%, down a little bit over 10 handles at 38.38, and this is not anything really to be concerned with yet, but we are seeing the PPMs continue to falter here, staying below their first and second derivative on PPM1. PPM2 is still above them but turning down, which is a suggestion that we're going to see a move down to print toward the 10-period moving average. As we look at the grid, we'll see that the 10-period moving average right now is at 38.15. We're still about 22, 24 handles off of this level, which suggests we could test this as early as tomorrow, depending on what type of configuration we get. Now, with the Fed and all the earnings reports that I had talked about in the opening comments coming out, we could see this thing just waffle here, but any sideways movement is going to set up for more risk. So maybe the configuration will start to set up where we'll take out the 10-period moving average at 38.15 and the possibilities of printing down into the 21-period moving average at 37.77. Taking a look at the SPX, yesterday, as I mentioned, we did see a nice reversal on that chart. We traded down to 37.97. The high was 38.59. We saw a pretty substantial reversal, but the PPMs really didn't react much. Now, PPM1 is at a 0.08, PPM2 at 0.21. So we're right at trend level, but it's not very robust, which suggests that the 38.17 or the 10-period moving average is in play. As we look at the market grid for tomorrow, you'll see that the possibilities are now for an S2, 38.38, and an R1. So look for R1, S2. If we take out the 38.38 level, then we're definitely will see a move down toward 38.29 to 38.21. And this will just be more or less a retracement of what happened in yesterday's volatility range that we saw. Now, if the market is able to close higher today, then that would be significant, suggesting that there would be some follow through, but there's a lot of questions that are coming into the market at this time. The next market I'll cover is the NASDAQ futures. They are down 42 handles right now at 0.3 or down 0.32%. We're seeing the PPM1 turn up, so this is somewhat of a positive. This continues to suggest that we're likely to see the market remain above the 10-period moving average, 13,151. That is going to be the key number, and I've talked about this average for nearly the last 2.5 weeks as being the primary demand line, and this is still the case. At a 0.41, that value at 13,151 has only a 20% probability to be penetrated. I don't expect that we'll even get anywhere close to that, but today's action will be significant. As I mentioned in covering the database, I'm interested to see if there's follow-through on the selling from the database and to see if we take out that 62% level. If it does, this could indicate that we'd see more of the rotation primarily in the NASDAQ, just because of the nature that there's a lot of small cap stocks that lie in this NASDAQ index. Going to the weekly chart on the NASDAQ futures, as I mentioned in last night's video, R1 is at 13,494. Yesterday's high was 13,554, and we closed at 13,434. So we closed right around R1. There's still potential for an R2 print at 13,643, but most likely we'll start to head at least down toward the S2 number. Yesterday's low was 13,189. S1 13,228, so we were able to print down to an S1 R1 so far, but look for this to expand on the downside slightly down toward the 13,079. I think there will likely be some protection taken before we see the release of earnings after the close on Wednesday for Apple. The next market I'm going to cover is Bitcoin, and the reason why I'm bringing up Bitcoin is one of the very first statements that Janet Yellen made was that Bitcoin needs to be regulated, it needs to be made legitimized, and immediately we saw a sell-off in Bitcoin yesterday. Now, the configuration, I've talked a lot about this, is a dragon head, which usually resumes itself to the upside. So we have at least 2 or 3 more days of consolidation. I should be able to cover this on the live stream on Wednesday, and hopefully we'll have some resolution of this pattern that's unfolding. But this is a substantial pattern, and when we look at the weekly chart on Bitcoin, we're seeing this giant formation set up, which most likely is going to be giant dragon formation. This is something from the market grid, and this suggests that we're going to be locked in this very large, very volatile range, and you're going to want to look toward that 29,700 level as a support level, and on the upside somewhere around 37,664 could print up as 40,000, but I think you're going to see somewhere between an S2 R1 as far as the prints go. That's going to be your trading range to watch for. The final market that I'll cover tonight is gold. I'm continuing to watch the formation in the weekly gold charts, and we are seeing a slight bid overnight, 1858. The other thing that Janet Yellen said yesterday, that there was no plan to cause the dollar to decline, which concerns me, the fact that she even felt that she needed to mention that. So that's going to be an interesting thing to watch to see if the dollar actually does decline. We're seeing some weakness overnight in the futures. I'm not going to cover the dollar, but there is some things going on there. The bid that we're seeing in gold is relative to that very brief weakness in the dollar. So I continue to expect to see gold move up towards some of the ranges I've talked about in yesterday's video, around the 1898 level with the possibility of getting up to 1921. I still see the 1836 level as a substantial support level. So expect to see that range set up. Possibly, if we can't get much below the 1850 level, that we could see a bounce back toward that 1885, 1898 level will be the resistance level, with the extreme upside right now of 1921. This will complete the video. Thanks for watching. We'll talk to you tomorrow night.